They've not started to make daily profits every week. There's
Good morning, all. If you can hear me, someone should drop audio in the chat. Good morning. If you can hear me, someone should type audio in the chat.
Hello, good morning.
All right.
Good morning. I can hear you.
Yes, let's exercise
But the
patience.
line is cracking.
The line is cracking. All right, hold on while I look into that. But I'm just trying to inform you to exercise patience for additional 5 minutes or thereabouts for those that might be having connection issues. So we'll commence in just a bit. So exercise patience. Good morning once again. Welcome to today's MMR. Today being Thursday, the 12th day of September 2024. If you can still hear me, kindly type audio. And someone complained earlier on that the network was not stable, that he could not hear me clearly. Walex Baron, can you please type your question in the chat? Walex Baron, you're raising up your hand. If you have a question, kindly type it in the chat. All right, from responses, I can see, okay, even from Alex Baron, audio is good. You can hear me loud and clear. All right, my name is Olabisi Olalere. I'll be facilitating today's class. Let's get into it right away. We've had quite some numbers join. So for those of us that joined late, please, let's make it a point for 8 a.m. every morning, please, 8 a.m. every morning. And if for any reason you come in too late and you miss the beginning part of this class, it's a live stream. It's on our YouTube channel. You can get a link. I'll drop it later, but you can also get it from your account manager so you can follow up on anything you'll miss. So please bear this in mind where you'll be picking up or asking some questions in the course of this particular webinar this morning, that if there are certain things I mentioned that you didn't hear properly, or you feel you need a reference to, you can always fall back to that YouTube channel to watch the recorded one or the replay of this live stream. All right, so let's get into it. If you can see my screen, please type hello. If you can see my screen, please type MMR. You can see I have a screen display here. Make daily profits, morning market review. All right, splendid. Now, we all know that when it comes to trading, that one currency everyone is so concerned about, being the USD, that's the global reserve currency, is in everyone's mind. And in recent time, there has been certain issues and sentiments regarding it. Because for every of my class, when it regards to trading, two things you always have to keep in mind is the technicals and the fundamental. But before doing any technical analysis at all, it's very good to have at the back of my mind what is pushing price, if it's beyond just the intrinsic value or the strength of the product or the instrument you're trading. What else? What other economical issues, social issues, environmental, political things that might be responsible for some of the moves that we see? That's when time you see erratic movement in the market, something else is moving price beyond the intrinsic value of the asset class or the instrument you're trading. So that's why we always view fundamental and technicals. Always check the fundamental ahead of your technicals. And if for any reason you've done technicals and you feel confident in it, you still need to fall back and go see that the technicals are not expected that day, because that can throw your analysis into jeopardy if things change based on the report of the fundamentals. And for our fundamentals now, let me move to Forex Factory so that we can go and view what it was yesterday, because the news was released yesterday, and how today might play out. So please let me switch my screen now to Forex Factory. I've moved to Forex Factory. If you can see my Forex Factory screen on display, please type Forex. If you can see Forex Factory, please type Forex in the chat. All right, splendid. We're still together. Yesterday, a major news was released at 1:30 p.m. for the USD. That's the core CPI. And it came out positive. CPI, in a simplest term, is a tool for measuring the inflationary pressure in an economy. What is the consumption rate of the households? CPI means Consumer Price Index. That measures a basket of goods, that means sets of goods that are taken to be a staple, that means household stable daily use, excluding some large expenditures. So looking for nearly everyday usage for consumers that cuts across board, irrespective of class. And this lets us know what the demanding and purchasing power of individuals are. Because if you don't buy something, that's because you have purchasing power. Whatever it is you can buy, that means there's a purchasing power to it, no matter how expensive it is. So long as you can afford it one way or the other, you have a purchasing power for it, because demand, in simple terms, is not just the desire for a particular product, but also the willingness and the monetary value to back up that particular desire. Meaning, I want to buy this. I have the money to buy it, and I also am willing to part with that money to get that particular product. So all of this measures the inflationary pressure in an economy, and it's a sign of increased economic activity in a way. So that was released yesterday, and it was positive for the US. In the recent weeks, we realized an unstable dollar, and that is not far-fetched considering the political situation in the US right now, and just about 50-something days to their own election. And it's a very tight one, and this is a very dicey period in the American political sphere. So all of this adds up to the sentiment that is affecting what you see on dollar right now. And today also, another important news will still be coming that would now be a testament to what happened yesterday, which is the core PPI, still 130 today. PPI now measures inflationary pressure from the producer point. That's producer purchasing index. That's the cost of producers getting raw materials. CPI measures finished goods, the one that goes to consumers. PPI measures raw materials that gets to the producer. Here's the interplay. If consumers are demanding for a particular product, as the demand for that product is going up, it will outplay the available supply. And if that happens, that means the price of that particular product will be going up. And by law of supply, a producer is willing to push as many products into the market at a very high price. Demand has a negative correlation with price. Supply has a positive correlation with price. So as price is going high, the producer will want to push enough supply into the market, hoping to sell them all at that prevailing market price. So if CPI shows a good number here, as it was released yesterday, indicating that consumers are willing to buy and prices are gradually pushing up, producers should also see the need to have acquired increased raw material so as to cater for the demand of their product. So if this news comes out negative, it creates a confusion. Most investors or those that felt the strength of the dollar should come back may chicken out or ease off on that. But if this comes out positive or reasonably so, then we'll see dollar rebound across pair. Because for most of the movement dollar did yesterday, you realize that that move was also covered back on most of the pairs, because investors don't have the long-term thinking yet until they see today's own news, which should corroborate what happened yesterday. So that being said, we've laid the foundation to what the fundamentals should look like. Let's now go to the chart and look at some technicals and direction for some of these trades. Please, if we're still together, I'm moving on to my MT4 now. Let me load the MetaTrader platform. I'm sharing my screen as we speak. All right. If you can see my chart, kindly type chart or MT4. If you can see my chart. Chart. All right, good. All right, we're together. Please, hope the speed is okay. Hope I'm not too fast. If you think the speed is okay, type okay. If you think it's fast, type fast. All right. This is what I said earlier. Someone is asking now, is there any relationship between CPI and PPI? I just explained it, and just for benefit of the doubt now, I'll restate it again. But I've said before, maybe you joined this particular webinar today late. I said, if you miss any part of this lecture and you need to reference it, reach out to your account manager. You can go to our YouTube channel and watch the replay because it's streamed live. So it's going to be in our archives. You can always fall back to it. But let me run it once more for the benefit of that and for those of us that might still need some more clarity. When it comes to business, there are two sides to business: buying and selling, demand and supply. Buying is for the consumer, selling is for the producer. In economic principles and law, the higher the price, the lower the quantity demanded, meaning there's a negative relationship between demand and price. But for supply, that's from the producer point of view now, the higher the price, the higher the supply. So that's a positive relationship. And in layman term, here's the reason behind it. If you have 100 naira, you are looking for the most you can buy with that 100 naira. Hence, you'll be looking for the cheapest price, but with good value though. Don't let's stray with possibility of value or the interplay of value. And for the producer, he wants to sell as many as possible at the highest possible price because that will aid his profit margin. So what I'm now saying is this: a CPI measures inflationary pressure from the consumer perspective, the buyer's perspective, the demand people. The PPI measures inflationary pressure from the producer's point of view, from the seller's point of view. So what that means is this: when a producer realizes that people are demanding and buying higher quantity of his product, the supply of stock level will be depleting because the wholesaler will be requesting for more product. And people will not request for more product. That's suppliers will not request for more product if they have not sold the ones with them. So as suppliers are requesting for more product, there's something called average or appropriate stock control level. So the producer's stock or store area are keeping inventory. They know what their minimum threshold should be. That means the level to which their product on ground should not be lesser than. And this cushions for the timeline it takes to produce newer one. So once that happens, the company now realizes that they are getting close to that stock control level. That means the minimum threshold they should have in stock. They must rush to produce more. And in rushing to produce more, they have to go and buy raw materials. So in the real sense, if consumers are demanding high, that means CPI is going high, and PPI is not going high, there's a disconnect. Something is wrong there. Even though PPI is a lagging indicator in the sense that the time it takes to acquire, produce that thing, I said the lagging is an incident stroke futuristic indicator that this CPI, because the CPI is lagging, they've bought it before. CPI measures it. PPI is measuring the current one because it's an incident indicator. Then also futuristic, because whatever the producer is producing is for the consumer at a future date. So that is the relationship between CPI and PPI. So if CPI is positive, PPI should also be positive. This is the basis to that relationship, and that helps. So now, please, let's move on to the chart and let's see what today's trade will look like and where the opportunities are. From what I have on my chart now, I'm on the US IDX, that's the dollar index, which is a measure of the strength of the dollar as an individual currency against a basket of currencies to measure the weight, the relative weight of dollar across board. You can see that the price had been on a downturn for a long time, and now it's trying to force its way back up. It has made a double top here. If it doesn't break here, then price will go down. But I have that strong feeling that if today's news comes down positive, then it's going to be able to break this proven resistance here at this point here, which is the forecast now. Price is at the highest the US IDX has been in recent weeks. So I'm hoping for it to break above it. So let's now go to the currency pairs, the major ones we know that our clients work with, and let's see what today's trading will look like. I'm on Euro USD and I've moved to Euro USD. You can see what price has been since last week when non-farm payroll came out. You can see it was mixed, spiked up, spiked down, balanced, and price was on a downturn in favor of the dollar because dollar has been having back-to-back good news now. Here was the movement yesterday because price was already tracing from what dollar has done over time, but see the news now pulled it back down and is on a verified support. I'm on H1 time frame for Euro USD, and the lower bound of that support, let me pick it here. The lower bound of this support is at 1.09988. That means you have to wait for price to break below this level before you can be sure that price is continuing in its downturn. Even though the sentiment right now is high in that regard, because most of these currency pairs have traded higher against the dollar, and this is a retracement moving back to the reversal point for dollar. But it needs some fundamentals to support the strength against the sentiment investors and traders have against the dollar right now currently. So for Euro USD, you have to wait for price to break below this verified support before you can plunge into any trade here. And I should think price on the downside is what you should look out for. So don't rush into any buy trade on anyone here, except for those that are trying to scalp. Since it's on a verified support now, might be looking for what? An instant buy just for maybe 10, 15 to 20 pips. But if you're not one of those, you want to keep a reasonable trade for say about upward of 30, 50 pips, then you may want to wait for this verified support to be broken first before you decide to enter any trade on Euro USD. Let me check on the divergence to see if there's any divergence on this particular currency pair here. All right, all is clear. There's no divergence formation yet. The one that formed before was nullified. So that does not stand. So for Euro USD, wait for the verified support to be broken before you can think of what another bearish move there. Because you can even see using candlestick pattern formation. Let me zoom in slightly. This here that you have here is a bearish engulfing candle. And it eclipses not just the past immediate one, which is should by principle, it eclipses the last three candles. Hence, price should be on its downturn. And you also see that there have been several formation of doji here. So price is just being held by this verified support. When the support gets broken, price is on the downturn. And as a confirmation, the next candle here, after a bearish engulfing, should also end bearish. So if this does not end bearish and ends as a doji, it's also an indication of price still on a downturn. So wait for this support to be broken, following the price I gave earlier on at 1.09988. Then you know that price continues on its downturn. Let's check USD card. I've moved over to USD card, and you'll see on USD card, price seems to wait at a range here. Let me zoom out slightly. You'll see what I'm talking about. USD card had been down for a while, and here's dollar now making a rebound. Dollar broke out of this channel here and got to this verified resistance. It initially went above the 38 Fibonacci retracement level, hit a verified resistance at the top, which has been holding price down. Even after the news came out positive for dollar yesterday, and you can see the push up here and to rejection of price here, but price still found its way back down to come and rest on this initial channel, the upper bound of the channel, which also serves as a support at this case here. And that is where you have what? A verified resistance. Price would find its way here and still stay. So today now, that news for 130 will be key in knowing where this particular USD card move will be for today. Because as it is, price, let me pick a point here also. Pardon the fact that the chart is looking almost too busy, and that's because I have multiple types of analysis on this USD card. I've been monitoring for a while. I have vested interest there. Let me pick a separate line, just a minute. All right, you can see this magenta line where price has fallen below. That coincides with this other level, as you can see, 1, 2, 3, 4, before this breakout. So it's a very solid point, this verified resistance point that has been built now. So for today, price might store from now till that 130 on USD card because there's no impetus that will push price until that time, which will be a confirmation to what happened. That's going to be a testament to you that if that news still comes out positive, then the rebound is continuing for USD card. It will rally. Price back on the upside in support of the dollar. But if not, then price is headed back down, and the closest verified support, which should serve as a take profit for any bearish trade here, is from price level 1.35480 to 1.35379. 1.35379. That is where you have the support level. So any price going down here and you have maybe a bearish trade, you go short on this, target there as a take profit point, and just above where we have the verified resistance here as your stop loss level, which is at price level 1.35863 and 1.35737. The resistance level here as we have it is 1.35737, and the upper bound is 1.35863. So you can see that price will range within this particular price levels, pending when we pick a direction, and that is dependent on the trade, the news rather we're expecting later in the day. So if you already have an ongoing trade on USD card, this support resistance level I've given are places you should target for protection or for your take profit, pending the news. But at the time of the news, you need to be very careful and be alert. There are two ways to manage your trades when you have an ongoing trade, that means you have an open position, and the news is expected. If you're already in profit on such a trade, please, very key, follow me up on this, please, very key. This is a very important risk management technique I want to teach here. You have an ongoing trade. You have, hello, somebody's complaining about my screen. Please, as a confirmation on the chart, can you still see my screen? If you can see my MT4 screen, please, someone should type MT4. If you can see the chart. All right. Just as a confirmation, what currency pair are we discussing right now? Just as a confirmation, what currency pair are we discussing right now? USD card. Thank you. Splendid. Please, the chart is not blur. If you cannot see it clearly, check your network. It's not blur. I know it's zoomed in, I zoomed out rather, so it's smaller. That might be the issue. It's not blurry. It's zoomed out so that you can see the true picture of what is happening. If I zoom in too closely, you won't see the range and things I'm talking about. All right. So back to what I was saying earlier on. If you have an ongoing trade, you have an open position, and you're expecting a fundamental, whether in profit or in negative, rather than rushing to close the trade, there are two ways or two things you can do to manage your exposure in that situation. First off, if you're in profit, move your stop loss from the negative region to the other side, hence protecting some profit for you in the course of that trade. So what that means is, even if price will go against you, because your stop loss has moved above your entry point, you have protected yourself from making loss on that trade no matter what. Secondly, you can use a trailing stop. The two I'm discussing now is with regards to a profiting position. You can use a trailing stop, which follows the market. As more profit is being made, it will automatically be moving your stop loss for you. That is for the profit situation or scenario. For the loss scenario, you have a potential loss, or you have negative, you have drawdown, to be precise. That's the better terminology, please. You have a drawdown, and as the trade is ongoing, the news is about to start. First off, check to see what is your risk tolerance. Like, how much is the worst possible you want to be on that trade? Move your stop loss to that level, but don't close the trade. So what that means is, once the news comes out, there's a possibility of a spike, or the price can go in your favor. If it goes in your favor, it means that the negative will reduce and might even push you into profit. At times, the spike, that's the initial sentiment or speculation, because yes, people still speculate, even though we advise against it. Some persons don't wait to see the full result, and some also might see the result ahead of others, and you start seeing action or activity, reaction in the market. Once that happens, it may fortunately go in your favor, in which case the negative will now reduce and might possibly push you into profits. But if for any reason it's going to go more against you, that stop loss will cut off the trade for you at your worst possible risk level. So that is how to handle such when you have an impending news release and you have open position. All right, moving on from USD CAD, let's check USD CHF. I've moved over to USD CHF chart now. And we can see the same situation is playing out. Dollar weakened for quite a long while and is heading back now. And it's at this verified resistance, meaning price to go further in favor of dollar needs to break this resistance we've been seeing, or support, in depending on the position of dollar in the currency pair. In GU, it will be at a support level, same as EU. But for USD CHF, USD CAD, where USD is the base currency, it's at a verified resistance where investors and traders, analysts are waiting for price to break above that first before they can now project where the next alt will be in price. So price is at a delicate point on USD CHF also. So allow this verified resistance to be broken before you can decide on a trade yet. But looking at the lesser time frame, let's see what is applicable at the lesser time frame. On lesser time frame, you can see we have a turncoat resistance here. That means it's still respected even at the lesser time frame. It's only at 15 minutes it's been able to break the closest resistance, meaning the time it's taking to stall there is gradually going to break it. But rather than envisaging or anticipating, let's allow price work first. See, for you to be a successful trader, yes, there are times you have to anticipate, no disputing. But you always need to have your trigger and your confirmation point. What should price do first before you decide on some of these things? So in my own reason with today's trade, you need to allow price break out of this. And beauty about it is this is a close nested point. It's not far apart. Either price goes above price level 0.85426, then you know at that point you can think of your long trades. Or price goes below 0.85152, then you can also consider what? Shorting this particular currency pair. But in any case, note that with all of this that you have in mind, and when they happen and you place your trades, keep mind on 130, please. I can't stress that enough. It's very key, very important. See the same thing, USD JPY on its way back up. Price retraced. The news brought it back. So we didn't see much of the effect of the news, because what the news moved yesterday was covered back on all of the currency pairs, as you can see that I've been pointing out. It was covered back. And that's because more confirmation is needed. So for USD JPY as well, you can see rice is trading within range here. And that's the verified support at the lower level here. Wait for price to break this turncoat resistance here. Either you wait back for a retest, or you can plunge in from that point. Or if price falls back to this verified support, then you can have a buy limit here and set up and follow up this move on the upside. This is because anything that makes price come here, this support level is verified and we hold price. At least it must first return it once, which was what stopped price here. If you look at this here, it has happened here before, where you have this piercing formation here. And that was 36 pips, meaning the same thing too would happen if pressure moves back to this verified support level here. As you can see on my chart, the place is shaded. That's around the price level. Upper bound is 142.288 and the lower bound is 142.211. That is where we have the verified support. So once price falls to that level, you can think of what? A limit order in favor of what? A long trade there, just to make some maybe 30, 50 pips. And it can sell as high and come back to this resistance here based on the fact that price is ranging, as I've stated earlier, which is about 60 pips, twice of that. So from 30 to 60 pips, that's something you can make here on USD JPY. GU would have semblance for EU. They have a correlation in their movement. I've moved over to GU. I've moved over to GU. You can see same thing. Dollar is trying to get its trend back and price has been on a downtrend as it were. A correction of what has happened in time past across board. See, GU traded up for this long and gradually, and this movement up was steep. It was faster. Let me point out what I mean. From this low point here, it took price just 1 week, 3 days. So that's 8 days in total. From this point here to this point here is 1 week. And right here, you have 2 days. And right here, you have what? Another 2 days. So give or take, that's 8 days plus. But look at now. In 2 weeks plus, price has not corrected more than half of that movement. So for those that are Fibonacci people, let me sketch out something here and sketch the initial movement targeting the retracement. Price had corrected to the 38% level, and which was respected, went back up, continued back, but has not gotten to its real resting point at the 62%, which is at price level 1.29858. So price should still head back down until that 62% level, which is 1.29858. But here's the challenge here, that with this move now that you can see here, price needs something to push it back there because it's at the mid level. That's a 50% correction level. That's what I said. Price has only made 50% of the move it made in less than 2 weeks. And in over 2 weeks, price has only been able to correct just half of it. That tells you how weak dollar is to the other pairs over this period. But gradually, it's getting it back, but not as steep or as fast as some of us would expect. So hence, you need to be patient on this. Let me remove the Fibonacci so that I can go closer now. So from what we have here, looking at the lesser time frame, price in a tight range. There's a verified resistance at the lower time frame here, which coincides with all of this upper level. You can see 1, 2, 3. This is the shaded point here. So except price goes above 1.31142, and which is quite a distance from where we are right now, you are not expected to plunge into any trade on GU. So what I'd advise is for GU, wait for 130. It will give us a clear path by that time. That is when you get a clear path, because price still seems to be on the downturn, but it needs some momentum to aid its movement in that direction. And if that happens, there are 2 key levels in time past that I have had outlined here, which is 1.29502 and 1.29062. At those 2 points, price would have a halt. Price will have a halt. The first one is approximately close to the 62% Fibonacci level. So price may halt there. So you may take a profit there, or at least protect the part of your profit there if you're waiting for it to still go lower. All right, let's touch on gold. I've had some persons drop message regarding gold. So let's just touch on gold. Or I'm seeing some questions already, but hold on. After gold, I'll look through some questions. I'm gonna use that to wrap up today's session because some of those questions might take us into some other instruments. But let me touch on gold first. All right, here we are on gold. Let me zoom out a little so I can see the effect of what the movement has been. Since gold went up, as you can see, price has stayed in a range, although the range in question is enough to make good profit from. So for those of us that are not long-term or positional traders, this is where we always target for the swings. In this case also, the swing now ranges. Price has been held bound, and within this same space, we have 491. That's sizable. So it's something to work with. And you can see multiple build up at the top here and 2 build-ups at the bottom, and now it's now tightening in perspective. There's a verified, see, proven support, verified support, and there's a new verified support formed now. So moving closer, price is now in this tight range here. Gold, which we know is a safe haven, a store of value, store of wealth, as against fiat money. It's, as far as I'm concerned, if for dollar not being the global reserve currency, gold is arguably the most exchanged form of currency or payment, and it's timeless and ageless. So anytime people are not too sure about the direction, the economic policies and the effect in any economy, the smart move for most investors is to store that their money in what? Gold, pending the appreciation. You will see that with the old strength that dollar has, it's not been able to push gold down. And that's because dollar itself is at a precarious situation right now, hence the strength that gold has. But for anything to happen here today, for price to come back downward, it's showing some rejection here. Let me look at the higher time frame, please, and see what candlestick pattern formation shows us. If you look at this here, spinning top, all of this here are indication of price rejection at this higher level here. And you realize that price has not been able to edge above there all through this period. And you have too many shadow formation here on both sides. All of these are sense of what? Indecision. You have a hammer formed at the top and inverted hammer both at the top of a trend. It's better when you have them formed at the bottom of the trend as an indication of what? Bullish reversal. But that's not the case. It's useless here where it's being formed. So as it is, price is looking for how to go down on gold. But then we need to wait for what? Confirmation of how that movement will be. Since for those of you that have not placed a trade, you have missed the best entry point, which is at this proven resistance here, and price was going down. So if you're plunging into any trade now here, it's also precarious because price still has some reasonable point down here before it gets to what? A support level that can hold price. So it's quite a distance. If you want to look at it from another perspective, let me see if this has formed a divergence. Just a minute, please. Let me load on the divergence setup. All right. There's no divergence from there. Price is moving as shield. So in this case, divergence will not push price down. Normal price activity should be expected. So what I'll suggest for gold is for you, if you're making any sell or bearish trade on this instrument, give a tight stop loss. Like where price is currently right now, the closest high, as you have it very close to it, the most recent high is just about 30 pips or thereabout from the current price right now, you may consider that. And if you do so, that means you're giving you a tight stop loss, in which case you are waiting for price to go down while expecting that news I stated earlier on for the end of today. Or we can even take another approach and try and work with a closed range point and set our Fibonacci. Let me try that out, because I know most of us, after Euro USD and with a couple of indices, gold is arguably in the commodity class assets, if not the most traded, one of the most traded. All right, I've sketched out just this close point here. That's the closest range here. This is the highest here. This is the lowest in recent time, in short, for the whole of this week. And you see that price coming back at hit down at 62, which was what pulled price back up. Price came again and rested on what? 38. That's why price could not break here too. Can say there are some hidden forces holding price there. So if you're placing any instant execution here as a short trade, you should be looking at your 38 level, which is at 2511. That's $2,511.61 as your take profit point on this gold trade. Or wait for the 38 to be broken first for you to have an entry. Wait for it to be broken first if you're the conservative type, and then look forward to the 62 you can see, which coincides with the verified support. So Fibonacci is also giving the direction here that if you have any sell trade ongoing, those are places for your exit. That's for your what? Your take profit. And if you've not in any trade right now, allow it to break this 38 level, which is the low that is holding all of this here. Why I said price is looking for a reason to go down, which is at 2511.61. I said allow that level to be broken, enter your trade, and you have a space downward up to the 62% level where you have this verified support to take your profits. All right, that's that on gold. Let me check through the chart, see which other questions we'll use to wrap up. All right. Those that just started today, how can they meet up? If today is your first time, you must have attended our usual trainings or intensify efforts in learning from our classic financial trading program, where we teach the foundation and fundamentals to trading. If you're confused about this, please liaise with your account manager. The appropriate class for learning will be suggested to you so I can join that. Then you'll be able to follow up with us at the level at which you are in this MMR, the webinar for trading per every day. I have another question here. During news, stop loss is not respected. Please, why? Please bear in mind that stop loss is always respected, but there's a conditionality to it. The condition to it is that there must be a price to fulfill it at that price. Here is how trading works. For every trade you buy, someone else is selling. That means you're buying what that person is selling. And anytime you sell also, somebody is willing to buy what you're selling at that prevailing market price. So here's what it is now. Anytime you fulfill an order and you set your stop loss or your take profit, those are taken as what we call limit orders. In every trade you do, for every position you take, at the end of the day, two of those positions, the two types of trade will happen. But because it's happened simultaneously and very fast, you don't understand how it plays out. Take, for instance, a tailor. A tailor goes to the market to buy materials, trade. Or rather, let's use a restaurant. A restaurant goes to the market to buy foodstuffs, input, gets to the restaurant, cooks and sells them. So every trader, every business person is both a buyer and a seller, just at different times. So when you buy an instrument, for instance, it is with the mindset that price will go to a higher price and it is sold for you at that price. So when you place a take profit and stop loss, What does that mean? It means that the instrument you've bought are risen in price to a point and you have placed a limit order, meaning limit price movement for me at so price level. I'm okay with the build-up of price at that level. Hence, the system will automatically sell it off for you to whomever wants to buy elsewhere at that price level. Hence, you make a profit. And if you set a stop loss also, it means that I've bought at this price level. But if price goes below what it is, that is not my intention. Please limit it from falling below this particular level. And as it's going down, it means that the value of what you have bought is depreciating. So if you now sell it off at that your stop loss level, that is why it reduces from what you have paid. So now here's the thing. If at the price where you set those limit orders, that's your take profit and your stop loss, there is no order to match it with. We call it matching order. Is matching your order to the other side where someone else wants to buy what you want to sell at that point. So if there is no price level indicated by someone else at that point to match those two orders, it will not match it at that point. It will look for the closest order price. I say, stop it for me at minus 5,000. Then at that time, nobody is willing to equate it at that level. It may move to minus 5,100 there. Or I say, take my profit at 57,000. Then the market gaps. The moment market gaps, that means there's no activity that can be indicated or scheduled for you at that time. And that happens when there's high volatility in the market, especially when there's news. If it now gaps up, instead of giving you 57,000 naira profit, it can give you 89,000 naira profit, because at the next available price, where the system can realize that activity is happening, it will end that trade for you at that level, hence increasing your what? Profit level. So it's on both sides. It's a flip side of a coin. Either side gives situation based on what it is. We have just 4 minutes and I'm looking at several other questions here. Thank you. What I just explained in simpler terms is what someone has dropped there. Slippage. Slippage is when price is not available at a particular level and is fulfilled at another level where the price is available. So the coinage for it is slippage. The price has been slipped or moved from one point to the other. But I just give an example of how that comes to be. US 100. We have a lot of US 100. Let me just rush and pick that to round up. US 100. All right, I moved over to the US 100 chart. Let me change the template. Just a minute. All right, for the US 100 charts, from what I can see here, you realize that price just broke above a turncoat resistance. What that means is, for a trader like me, I would wait for a retest. I'll wait for price to fall back and hit on this first before I can continue the rally on this. Because if you check it closely, price has gone down a lot on this index. And once that happens, price tries to find its way back. And the projection is that price will still go as far as this verified resistance. There are two of them here. One, the closest to where price is currently, is about 376 pips, and way above again, you have about 716. Note, when it comes to indices and index, we have them in ticks. So that's why you see that for every tick, and by the time it turns into the profit value, it's higher than your currency pair. So what we have right now is price is back on its upside. And you can see the strength is indicated from this formation here. These two candles, you can see here, this bullish candle. So the strength is pulling back. But the resistance is just broke here. is a turncoat resistance. And what that means is it always allows price to retest first. And that place held price in time past. I'm zooming in more so I can see price came and rested on it here before heading back up. So I'm expecting price to come back here first to rest on this before heading back up. So you can have that turncoat resistance point. Oh, let me go lower, please. Pardon me, that was on H4. I know most of us might not have the capital to sustain such a trade. So please, apologies. I've gone to H1 now. Let's even say 30 minutes, a lesser time, so it's easier for you to see faster entry points. Okay, all right. On the lower time, you can see here, there's the turncoat resistance, here's the turncoat support below it. So I would rather wait for price to get to this turncoat support here before you can plunge into any trade on your US 100. US 100 should be on the upside, but note, it's not going to just jump once. It's a gradual process. Trend forms as a build-up over time because price was initially in a range here and broke out of the range. And not just that, it broke the next resistance, which is now indicated as what? A support, and it broke it last night. To hit this resistance, I expect a mild retracement that should get to this price level here. And that support level, the closest one as I have it here, has the upper bound of 19180.16 and a lower bound of 19119.61. Lower bound 19119.61. Upper bound, I'm picking it again, 19181.1680, around that level. So that is the closest support. Wait for price to come back to this support. Rest on it, then you can plunge in again for your US 100. And I have one question here. No, SL can be trusted, please. SL can be trusted. What we're saying is this. There is a conditionality to it. Let me use another analogy. Imagine you send someone to the market to help you buy something, and you gave a condition. If you see it at 500 naira, buy. If you see 550, buy. The person now goes to the market, does not see 500, was seeing 590, 600, 650, then sees 552 naira or 555. The person will be conditioned to pick it for you, knowing that other situations are worse than that. And this is the best possible it can get for you at that time and at that point. So it is trusted, but you need to also know the market conditions and situation. Volatility changes the game during fundamentals, especially. Please, that is what that means. I'm going through some more questions. It's past 9 already. Okay, you have a GBP sell order. Here's what I can do. There are still tons and tons of questions here still coming in. I'll drop my contact so that if you have another question, you can still reach out to me on that on WhatsApp and we'll just drop those questions. Or also reach out to your account manager with some of these. They can either give you guidance or link you up to those that can resolve this for you fast, because time is fast spent and we need to give opportunity for some other online classes and trainings that have been settled or scheduled for this period. So please, my name is Olabisi Olaleru. Your account managers will reply, don't worry. If you don't get fast response, there are several things that might be. You can reach out to the direct office line. Reach out to any of the direct office line, either our Abuja office, our Port Harcourt office, our Lagos office, our Ibadan office, any of these offices, and they'll make sure that the response is faster. Don't worry. We have a support, online support avenue also. All of these are to make sure that we cater for your need as prompt as possible. That's my contact details. Any other further question can be taken up from there on WhatsApp, and please reach out to your account managers. They will guide you right and link you up with the right persons based on your need. Thank you for joining today's lecture. We'll see you tomorrow also when we're reviewing some more trades and looking for what trading opportunities and options. My name remains Olabisi Olaleru. We'll see you some other time. Have a great day. On a final note, You can always go back to our YouTube channel to rewatch or reference some of these parts or these numbers and the direction we've spoken about in the course of today's webinar. Thank you. We'll see you tomorrow. Bye.